Hey fellow stock guardians, it's Wednesday, May 19th, 2021. I'm Hoda, co-founder and CEO of StockGuard, reporting to you from, you guessed it, another red stock market. I looked into why the stock market indices ended the day in the red today, researched Salesforce.com's upside potential, and discussed whether it's time to buy the dip in Workhorse Group. All three indices finished Wednesday in the red. They also started the day deeply in the red, and despite a steady upward movement throughout the day, none of them managed to pass the zero line into the green zone. The way I see it, there are three contrary points of view circulating around the market. 1. Some investors believe that the Fed may ease its favorable policies now that the economy is on track and inflation is above target. Other investors worry that the Fed misses the signs and does not take the required actions before inflation spreads. And the third, and perhaps the most interesting point of view, is that the US is headed for deflation and not inflation. ARK Invest and Cathie Wood are the faces of such a deflation hypothesis. The third deflation possibility is quite interesting and contrary point of view, as we discussed. It's undoubtedly the one I tend to agree with the more I gather information about the reasons behind the current inflationary forces, including the panic buying of businesses and the catch up they're playing with the demand. If the third point of view is correct, we have a unique opportunity to buy the dip in several tech stocks among many others that are shaping the future. Time will tell who is right. But as investors, we should be ready for all three point of views. I explored the watchlist ideas page on the StockCard today and noticed shares of Salesforce.com CRM were up by more than 2%. The company is now a rare four-greener. A four-greener stock on the StockCard platform is a company with robust market opportunity, solid operations, and history of outperforming the market that happens to be undervalued. Salesforce got an upgrade by Morgan Stanley today, and I won't be surprised to see the stock's upward movement continues. Cash-rich, profitable, and growing companies do not stay undervalued for quite long. I own some shares and plan to hold for quite a while. By the way, I'll leave a link to my four-greener watch list in the show notes in case you'd like to have a look and find a stock similar to Salesforce.com. For the loser stock of the day, there wasn't any particular company that grabbed my attention. I looked into the requests that are sent through by StockCard users, and quite a few stock guardians were asking about Workhorse, WKHS. So let's do some digging together. A quick history about Workhorse is that the company was on its path to get United States Postal Service as a customer for its electric delivery trucks. The contract didn't go through and the stock nosedived after that. The question we need to answer is whether there is life for Workhorse without USPS. At the first look, the company has growing sales, earnings have turned negative in the last 12 months, and despite not generating any free cash flow, it has solid balance sheet with no cash concerns. This tells me the company can fund itself for a while before the next major customer shows up. Moreover, Workhorse is still among the top 25 holdings of ARK Invest Autonomous ETF for its delivery trucks and ARK's Space ETF for its drone product. However, ARK has sold some shares recently. In the end, had I owned a few shares, I would have held them. It seems the company is going after the USPS contract with some legal power. However, for me to buy, I would want to see the evidence that the company can find other major customers beyond USPS to grow. Alternatively, if you have done your research and know Workhorse has a unique technological advantage over other EV truck manufacturers, that might be another reason to jump in. I just don't have such information to justify jumping in now. there is also a small likelihood that the legal attempts to revive the USPS contract to pay off and the stock rally. If you are betting on that, make sure you know that you are betting on an outcome that the company has limited power over. It's a risky bet. It may or may not pay off. That's it for today. If you haven't already done so, please give StockCard a try. Research as many stocks and ETFs as you want, and consider following a few successful investors by visiting the Stock Pick page on the StockCard platform. Don't forget to sign up for a 14-day free trial with promo code ROLLWITHOURCEO, all lowercase and in one word. And as always, help us grow the Stock Guardian community by liking, subscribing, and sharing these daily market recap reports with your fellow investors. See you tomorrow.